Technologies are driving change in all sectors of economy, and agriculture and food systems are not exceptions. Autonomous farming, decentralized supply management systems, alternative proteins, and farms that are growing into the skies are a few examples of the future of food systems. Today, we're going to speak about these topics with John Friedman, who is the director of AgFunder Asia and investment director at Grow Accelerator. John, thank you for accepting our invitation and joining us today.
Thanks very much, Armen. My pleasure to be here.
John, you've spent more than 10 years in investment banking. What have prompted you to choose venture investments focusing on AgriTech and food tech?
Thanks, Armen. That's a good question. I spent the first sort of 12 years of my professional career out of university in investment banking, first at Deutsche Bank and next at Morgan Stanley. And all of that time, I was working in the public market side, speaking to asset managers, hedge fund managers, focusing on products, primarily public market products, fixed income, currencies, etc. All of this really gave me a strong appreciation for how global capital markets work, how fund managers and asset managers allocate capital into sectors which ultimately drive the economy, drive companies, provide funding for companies. I think my time in the investment bank really provided me that foundation and appreciation with how capital markets create change. But what ultimately motivated me to shift from the public market side into the private side, into venture capital, was the desire to be working closer to the ground, if that makes sense. I think ultimately what first attracted me to move out to Asia straight out of university was the promise of being part of the Asian century and being in this geography where there's so much exciting growth and economic expansion taking place. And personally speaking, after spending about 12 years looking at the sort of macro level, sort of top-down perspective, I wanted to get a little bit closer to the ground. I wanted to be speaking with and working with companies who were trying to be a little bit more innovative and transformative in the solutions that they were coming up with and providing. And finally, I guess in the particular industry or sector, hence my decision to focus on the agri-food industry, which I feel is such a critical sector for everyone. Ultimately, it's the industry that feeds us and keeps us all alive. And so finding for myself, I guess, a more impactful sector for me to spend my time and energies was a big part of my decision to make that move.
I want to spend some time talking to you about what you are working on right now. Recently, you have launched the Singapore Food Bowl, which is an accelerator looking for food and agri-tech solutions that can help Singapore to create resilient food systems. What are some of the promising startups and technologies that you can mention?
Yeah, Singapore Food Bowl is the second program that we're running at the Grow Accelerator, which, just to provide a bit of background for our viewers, is Southeast Asia's first agri-food tech focused accelerator based here in Singapore. So last year we launched our first cohort, which brought in startups from around the world. We did our call for applications through the AgFunder network, received over 160 applications in a period of a few short weeks, and ultimately decided to choose 9 of those companies to come into the program. When COVID-19 hit and we went into lockdown, we had to rethink how we could continue our activities and deliver value to startups entering this sector. And so we pivoted and sort of narrowed our focus to something that was closer to home, specifically the Singapore food story, or the 30 by 30 campaign, which the Singapore government announced last year. Again, just to provide a background, that's the challenge which the government laid to produce 30% of Singapore's domestic nutritional needs by the year 2030, up from about 10% today. So we used this challenge statement and the fact that we are based here in Singapore to craft the look and the feel of this new program, which ultimately became the Singapore Food Bowl. And what we're hoping to achieve through this 12-week fully virtual program, which we're approximately 1/3 the way through now, is a platform for early stage startups from around the Asia Pacific region to essentially accelerate their business model and their customer engagement. Obviously, channel that to the specific Singapore context, but again, use Grow's platform and the AgFunder network as a launch pad for them to gain traction. Obviously, deliver all the typical value propositions which a world-class accelerator should be providing, such as refining their business model, making connections to customers, connections to governments, regulatory bodies, and ultimately investors as well, to get the startups from this level to the next. And to answer your question, I think the results were really exciting. We received over 80 applications for the program from around Asia Pacific, and ultimately selected 12 companies to bring into the cohort, 6 of them from Singapore and 6 from around the region. And I think the breadth and the scope of the solutions that they're trying to deliver to the food system, obviously focused more around the Singapore challenge statement, is really inspiring. We have companies looking at everything from urban farming, which is obviously a critical component if Singapore is going to deliver on its 30 by 30 challenge. We have urban farming, we have food waste valorization, companies taking food byproducts and upcycling them into either new products or food packaging. We have digital supply chains, which is obviously critical given Singapore's heavy import reliance. We have companies looking at traceability, which is obviously a really increasing from the consumer's perspective in terms of what we can deliver in food systems around traceability, accountability to the consumers. And we have urban farming. We have alternative protein, which is again going to be a critical component for Singapore to be able to deliver its challenge statement of 30 by 30. So a whole host of solutions presented by these 12 startups, which I'm really excited to see how they come out at the end of the program.
Speaking in a more broader perspective, what are the technologies in the sphere of agriculture and food systems that would have really transformative impact on the future of food by 2050, say?
That's an interesting question, Armen. I think when we think about it from the investor's side and analyze some of the investment trends which we've seen over the past few years during the expansion of investment dollar going into the agri-food tech sector, the segment which received the highest investor dollar in 2019 was e-grocery and sort of food marketplaces. So clearly shifted more towards the sort of downstream consumer end of the spectrum when it comes to technology creation and sectors which investors are excited to put their money to supporting. I think the fact that I'd want to highlight is a lot of these companies have been born out of developed markets, and obviously these solutions are being targeted more at the developed markets. A handful of years ago, 90% of the deals that we were seeing were coming out of North America alone. Fast forward to 2020, that statistic is less than 50% today. And over the last few years, we've seen an increasing amount of investment capital being invested in addition to deal flow being generated out of emerging markets. And so when we ask ourselves as an investor, as a fund manager in this space, what are the meaningful technologies and companies which we should be backing? We need to identify where the problem statement is. I think to your point, there's a lot of focus right now on automation, on robotics, on that sort of decentralization of food processing. All of this has been heightened and highlighted through the COVID experience, obviously, as we had disruption in supply chains, workforces forced to not go into the factory. And we've seen the ramifications of this, the lockdown essentially across the world, whether it's emerging markets or developed markets, the amount of food waste, vegetables left rotting in the field, livestock forced to be sort of euthanized because they couldn't be processed efficiently, massive supply chain disruption. But I think, going forward, as an investor such as AgFunder, we need to, differentiate the needs of specific markets and how we channel that investment capital. For example, our co-investment funds have tended to focus more on the developed market space. So we're spending a lot of time looking at some of these more digital-focused robotics, automation, consumer, e-grocery delivery type platforms and technologies. That won't necessarily be true for some of the new funds which we're launching. For example, the Grow Impact Fund, which is going to be focused more on the emerging market space, both here in Asia, but around the world as well, and the types of solutions which we want to be focusing on, which are going to create a stronger sort of impact, measurable impact creation to the communities which to which that solution is being applied. So I think we need to, again, ask ourselves how we're investing that dollar in which solution, where it's being applied to which market, because obviously one size does not fit all.
You made one point about how those technologies really transforming the sector and that most of these technologies are produced in developed countries. And I have an impression that we're speaking about two agricultures. One is a very new, very developed, cutting-edge technologies in automation, robotics, decentralization, e-commerce. And on the other hand, we have 520 million farmers on the ground. What is the best way of helping farmers to be more efficient, to be more adaptable to such technologies? Have you thought about that, or is basically outside of your scope of work?
You've raised a really good point, and it's something which we at AgFunder are actively trying to solve for. UNDP has obviously put on a fantastic program earlier this year, which we're proud to be a partner of, Cultivate, which obviously I was seeking to identify technologies from across the globe and applying them to countries and agriculture markets which were most applicable and in need for that sort of digital transformation. The same thing is true from an investor's perspective. I think the fact of the matter is, long has the agricultural industry been overlooked in terms of investor interest and investor capital flowing into this space. One of the statistics which I read, which really motivated or piqued my interest and ultimately motivated me to move into this from the investment banking space was, I think a survey done by Deloitte a number of years ago, which was identifying the amount of venture capital investment flowing into different sectors. And when you compare AgriTech versus, one of the more popular or sexy venture sectors such as fintech, I think back in 2015, the number was, less than 3% of venture capital money was being directed into agricultural or food tech. I'm happy to say that number has increased by 250% over the last 5 years, to the point where, in 2019, we saw approximately $20 billion flowing into the agri-food sector as a whole. But going back to your point about, how it's been directed and to which segment of society, this bottom of the pyramid question has remains front and center in terms of how can we move the needle for the segment of society who really need it most and who are ultimately providing so much of the food that we consume, especially so here in Asia or Africa, etc. And I think, the reality is a lot of these countries, whether it's Indonesia or Myanmar, just citing, a few of the markets closer to home, digital engagement is already so high. We're talking about a population base which has sort of leapfrogged the traditional sort of developed markets of the US or Europe in terms of mobile penetration. Everyone has a phone, whether or not it's a smartphone, but they're connected one way or another. And it's very, very, very simple solutions, such as, a couple of portfolio companies that I can talk about, whether it's We Farm in Africa or Dahat in India, or a company that we're working with currently in the Singapore Food Bowl, Listen Field, and they operate in Thailand. They've developed very, relatively simple solutions. They're not taking up massive amounts of bandwidth. They don't require capital-intensive robots or sort of hardware in order to provide value to the farmers. They're essentially just empowering the farmer through their phone, which is in their hand, whether it's through satellite imagery, which is accessible at pennies to the dollar these days, whether it's just using the existing infrastructure which exists all around us, just to provide knowledge to the farmer, creating farmer networks to leverage knowledge from the crowd, essentially, and essentially democratize knowledge. Input pricing, obviously, when we're purchasing it at more economic scales. It's technologies and relatively simple solutions such as these, which is really just trying to deliver value back into the smallholder farmers' hands in not so technical or capital intensive solutions, such as what we're seeing more in the developed markets. And just by empowering them through this sort of simple solutions, which are applicable to emerging markets and applicable to the spending power that each of these smallholders have, will we be able to make, those increases in productivity, those increases in just take-home income, which is hopefully going to improve the livelihoods of the smallholder community, which has long been overlooked.
You mentioned that there is a growing funding to the AgriTech and food tech. And you mentioned that it has been increasing during the last few years. So obviously, many startups are watching this interview and they would like to learn your criteria of a good startup proposal. What type of criteria is the most important to you? Is it a leader of the team? Is it a team idea or technology solution?
I think when we consider startup applications, or we meet the founder for the first time, we hear the pitch for the first time, I think what it really focuses on is the founding team, especially when we're dealing with early stage ventures. It's the founder, it's his ability to connect, to demonstrate that sort of passion that they have for the problem. I guess it goes back to conviction. You got to be so clear and committed to that pain point which you're trying to solve for. And I guess fundamentally, it needs to be a valid challenge. It has to be an interesting enough market opportunity to address. Otherwise, it's probably not going to catch our interest. But again, once you have identified that pain point in the industry or in agriculture, then this is the solution that you're going to provide, and you have to be absolutely dead certain that this particular solution is so unique and differentiated from the crowd. I think it's also important recognizing that obviously, like in any other industry or sector, there's going to be a number of existing competitors in the marketplace. So how are you unique to your competition? Make sure that you've done that sort of competitor analysis. And be able to sort of speak convincingly and coherently about that. Ultimately, I think increasingly, at least from our perspective as an investor, we want to be aligning investment with impact. So we will be, and I speak on behalf of AgFunder, the Grow Impact Fund here, we want to be identifying startups which are marrying those concepts of solution with impact. So it's not simply just talking about your addressable market size and your sort of your revenue model and traction, etc. But fundamentally, what is the positive good that your solution is going to have in the market or to that segment of society that you're looking to address?
I think that's a really good point when you spoke about the impact in general, because my next question is about kind of a role of sustainability. Because, when you speak about venture investments in general, usually you're thinking about finding the best winning teams that can ensure high profitability and a quick return on investments, right? And this is my question. What is your position as representative of AgFunder and Grow Accelerator on the sustainability of the solutions? Does it play any role, or are you still kind of very much in the commercial indicators business?
I think I need to provide a little background to my position. I think prior to joining AgFunder, whilst I was making my own sort of pivot away from the corporate space and investment banking, I cut my teeth on the sort of venture space by angel investing in a handful of agri-food tech companies. And I have to admit that, I believe my decision to enter these particular ventures was probably driven by more of a sort of mission alignment or a particular area within the agri-food space, which I felt, particularly passionate about. For example, cell-based meats. This is a segment which is, going to take a few years before we get to commercialization, let alone profitability. But now with my AgFunder hat on, I think I have to recognize that we have an obligation and a responsibility to return our investors' capital within a certain time frame. Like any other venture capital fund, it's the construct, or I should say the structure through which we're investing our capital, which requires that return on investment much more than simply an angel investor with the sort of patient capital type of mindset would have. But I think what we're trying to achieve here through our outreach and our fundraising is demystifying the idea that impact capital negates the sort of commercial return that you can achieve through early stage venture investment. And again, that sort of ties into the broader education around just the opportunity in agri-food tech, which, to my earlier point, has been largely overlooked vis-a-vis some more popular venture sectors. I think just to sort of elaborate, we are structuring our investment or our fund in a typical sort of 10-year timeline, which is standard for an early stage venture fund. But I think the proof is in the pudding these days in terms of looking through the impact lens or a more sort of ESG type lens when allocating capital. No longer should one believe that companies which to do good are any less good at being able to return profit to their investors. Just for example, during the COVID, during the months of sort of April through June, the return on the S&P ESG index outperformed the baseline S&P 500 index by over 200 basis points. When you're selecting companies which apply to that sort of more stringent ESG type framework, what we're trying to do is apply a similar guidelines and selection criteria to the early stage startups that we're investing in, looking at them through a sort of impact lens, asking ourselves and asking the founders, what is the impact that you are delivering to the market and to those segments of society. Because ultimately, down the line, we believe that companies who are able to articulate that and quantify that will be able to attract greater investment dollar and ultimately, return, have a more sustainable business model than companies who are neglecting those types of performance metrics.
John, considering impact of COVID-19 on the economy and society in general, what is your take on the investments into the agri-tech and food tech? During the recovery, what we may potentially see? More investments into the agri-tech and food tech, considering the issue of food security? Or is it going to roll us back to the past when agri-tech and food tech wasn't really attractive for investors?
Yeah, you mentioned the impact of COVID on the economy. I think one thing which we've observed in sort of stark disbelief, perhaps, has been despite economies all over the world reporting record recession numbers, 2Q GDP, etc. We've seen the market like the S&P 500 continue to march higher, but obviously, if you drill into the details, it's really the tech stocks, the Apples, the Alphabets, the Amazons leading the way. And what that really nails home is the role that technology will play in sort of lifting us out of the recovery, or certainly just driving the future in terms of how the global economy is going to have to transform moving forward. I think if you apply that to the space, what we're talking about today, agri-food technology, one of the silver linings for me through this whole COVID experience has been the greater awareness, the light that has been shined on our food system's vulnerabilities. And I don't think there's anyone around the world who didn't experience that firsthand. I mean, even in a nation as sort of protected as we are here in Singapore with respect to food security, The Economist ranked Singapore, number one in the world in terms of, food security as recently as last year. And yet, here we are with, empty supermarket shelves 4 hours after Malaysia declares that it's going to close its borders, and we see a mad rush to load up. And obviously, even prior to COVID, the government itself had laid down this challenge of 30 by 30. Obviously, looking forward to bigger challenges on the horizon, such as climate change and what that's going to mean, what's the impact it's going to have on our food system. COVID-19 has shone a light on the vulnerabilities and the fragilities, which prior to this, I think we as a broad society have simply taken for granted. We've seen, both in terms of personal usage as well as investment dollar, such a focus on convenience over the last few years in place of, perhaps quality, or I dare say, real impact in terms of the types of companies which investment dollar is being funneled towards. And I really hope that as a society, as an investor base, pool of capital, we challenge ourselves to think a little bit harder about, from the investor's perspective, which types of sectors and industries are we going to be directing our money to invest in change, invest in innovation and transformation. And obviously, as we've touched upon through this conversation, agri-food has unfortunately sort of lacked in capital from private markets for a number of years. And that clearly has to change if we're going to get anywhere near where we need to be by 2030, let alone 2050, in terms of producing a sort of sustainable food production to meet the population growth that we're talking about, without destroying the world in the process. One of the numbers that stands out to me in last year's report by Temasek and Rabobank and PwC was the Asia Food Challenge, where they're talking about $800 billion worth of investment, which needs to, be directed into this sector over the next 10 years, on top of the existing investment amount, which is, primarily being funded by governments and corporates to this day. Obviously, that is an enormous gap to fill, and one which governments and the sort of incumbent players cannot fill by themselves. We need much more private investment dollar and public capital markets coming in to fill that gap. And I hope that through these experiences and lessons, the broader public markets can start channeling their investments into more meaningful areas.
John, my next few questions will be kind of a yes or no questions, whether you agree with these statements or not. The very first one, most farmers will lose their job because of technologies.
Most farmers will lose their jobs. No.
Technologies is the only way to feed global population by 2050.
Yes.
Alternative proteins will outpace conventional protein consumption by 2050.
By 2050?
Yeah.
Yes.
John, my very last question about one book that you would like to recommend our viewers to read.
Ooh, Armen, let's see. I'm not much of a bookworm myself, but if I had to throw out a title which I think has been really sort of inspirational for me in my own journey, actually, this is something which I read last year, and I'm going to put a little plug in for a friend of mine and actually a colleague at Grow Accelerator, a lady by the name of Shen. She wrote this book in 2019. It's called Hungry for Disruption, How Tech Innovation Will Feed 10 Billion by 2050. I might have got the last bit wrong, but definitely Hungry for Disruption is the first bit. And basically in this book, Shen lays out the challenge statement that's ahead of us. With a population forecast to reach 10 billion in 30 years, how are we going to produce that amount of food sustainably? What new technologies and processes are both on the horizon, but also in place today? It was a really enlightening read for me in terms of the pace of innovation that is already taking place. And it was really refreshing and really sort of motivating for me as I was getting my feet wet in this space. So I would encourage anyone to pick up a copy. I think it's available on Amazon. Hungry for Disruption by Shen Li. It's food for thought in terms of what we have to look forward to over the next 10 years and beyond.
Thank you. I think it was a very interesting conversation, and it was very interesting to hear John's view on the future of food. What are the technologies that will be driving change in agriculture and food system from production to consumption? Thank you very much, and see you soon.